S&P 500 had a pretty rough day today. You had the S&P 500 down 1.2%, you had the NASDAQ down 1.1%, and you had the Russell 2000 down 1.3%. So a pretty rough day across the board. There wasn't like a imbalance between strength in the large caps versus small caps. They were all selling off pretty hard. And that came as a surprise too, because yesterday you had a pretty good bounce in the market, setting up for some follow through today. The candles were good. The technical analysis was good. And you didn't get that. Now you have a lot of reacceleration of inflation across a lot of different countries right now, from Japan to Canada. And so it's increasing the odds that there's going to have to be more aggressive rate hikes in the future with the Federal Reserve in their upcoming meetings. We got one in September and we have one in November and then another one in December. So those next three meetings are going to be very interesting to see what they do to close out the year. First off, let's look at SPY. SPY had a pretty strong sell-off today. That probably an understatement to say the least. But there's definitely some areas that we want to look at here. So this rising trend line right here, going back to the March lows. So this March lows, this was established when you had the big regional banking crisis. When everything started falling to crap, you had the lows that were established in March. Then the Fed came in and bailed out the regional banks. So what happened next? We took off. And then finally, we're getting a retest of this rising trend line. Now before, it's kind of interesting. One of the things you got to remember about technical analysis is that as you get more data points and price action, and as more and more trading sessions come to a close, you have to reconsider all the previous lines that you did or that you're working off of. So for instance, before, I was looking at this particular chart as that being the rising trend line. And I was considering the fact that, yes, we do have a candle that's broken below the rising trend line, but it was more of an outlier. There was a lot of data points that was suggesting this was a strong rising trend line. But then when we started holding on to this 50-day moving average here, this red line, holding on to that over the next 2 days, I had to reconsider what I was looking at there. So I did redraw the trend line to where we're essentially sitting right on this rising trend line. Now, what do I think of this sell-off so far? We're about going on 3 weeks into this. The last 2 weeks, the NASDAQ, the S&P 500, both have been down each week. But what you haven't seen is actual panic come into the market. Real serious concern that among traders, suggesting that this is more of like a 2022 or a 2018 quarter four sell-off or a March of 2020 sell-off. We haven't gotten anything that looks like this. So far, I would even say that the selling has been very, very methodical and stair-stepping. So the old cliche is that the market takes the stairs up and the elevator down. We've been more like the elevator up, the stairs down. Very orderly sell-off. The volume hasn't been spiking. I mean, if you look at some of the volume that we were seeing back in March when there was sheer panic in the market over the regional banks, right here that is some serious volume right there. We're not seeing any of that right now. It's very dull. Today's sell-off, pretty much average. You had the S&P 500 down 1.2%, but you didn't really get a push with above average volume. Now, maybe with some of the after hours trading, it'll push it a little bit higher than that, but yesterday's rally, very low volume. So there's not a lot of energy in the market right now. And if you look at the last 5 days, it's down, up, and down. That means every day we're reversing these moves. And if you look at the yesterday's candle on SPY, we broke back above the 5-day moving average. And this is what you call one of those Marubozu candles. And I'd never say that word right, so forgive me if I said it wrong. It's just not my forte. This Marubozu candle, and I think I said it differently than what I just said it, actually was really strong. We closed at the highs of the day. And if you don't know what that candle is, it's a very bullish candle when essentially you have very little in the way of shadows on the candle. Shadows are these lines that are coming out on each end. Those represent the highs and the lows. With this candle here, we closed at the highs of the day. So there was no upper shadow on this candle body. And so it set up really well for a strong bounce in the coming days, or even to the next day. But instead we got a gap lower and then we retested this rising trend line. So tomorrow the task is going to be, are we going to hold this rising trend line and bounce? Also, what I want you to look at here is this support level. If we do break through this rising trend line, you do have support down in the 14 area. That would be a significant sell-off. There is also other trend lines to keep in mind too. This rising trend line that's a little bit higher than that price level support, that green line that I just mentioned. This trend line comes in a little bit higher, and it's going to continue to get higher as this one continuously gets a little bit lower because it's at a slight tilt. But this one's at 420. I think there's a very good chance that we see a pullback before the end of the year that takes us back down to this rising trend line. And if that's the case, that could also offer a good bouncing opportunity. So the levels are there. The bulls need to hold the rising trend line here, this purple line, going into tomorrow. If that doesn't hold, then you're starting to look at potential possibilities of pullbacks to this yellow line. This is the rising trend line off of the October lows of last year. And then you also have price level support that goes back to February of this year. That could also be another area to hold. Now, to the upside, what do we need to see? First, like I said, we need to hold that rising trend line. Then we need to also see a break of what is essentially a little mini downward channel. Some people would say, hey, you got a bull flag there. Possible. I mean, a little bit steeper than I would prefer a bull flag to be, but nonetheless, it is an orderly pullback. It's done on somewhat light volume, and it could offer a good opportunity to get long if it breaks back above 448. Or if you want to play it off of the rising trend line, just be mindful that there is this declining channel in the short term that it's trading inside of. Now, the Qs. So a lot of similar features there. We got this triple bottom here that was playing out. Some might say that's like a double bottom. If you just count all of that together, either way, it's fine. It's pretty much the same thing. You got a long-term trend line that is in play here. And then, let me get my little lines here going. I'll move that one back. Then you have this rising trend line. And this one's actually broken. So unlike SPY, this rising trend line has definitively broken this purple line here. So that's not good. You also have the price level support as well. You're also well off of getting all-time highs broken here. So that's really not even in play. So we don't even have to worry about that at this point in time. You also have some price level resistance, this white line here, and then this red line. Now, what I'm going to do is I'm going to go over all of them and tell you exactly what to look for. There's some resistance above, some support down below. We broke this purple line here. That's not a good thing for the market. That shows you that weakness is starting to accelerate some. You also had this gap fill today, and by gap, I mean this little area here on the charts. I'll just highlight it for you there real quick. You can see that thing got filled probably about 4 or 5 days ago, actually. But nonetheless, that's been filled. We can take that one off the charts. The one, I think there was one on SPY too that got filled. Yeah, that's the one. I was getting it actually confused there, the gaps. But yeah, this one I forgot to mention, that got filled today. So keep that in mind as we're trying to bounce off of that rising trend line. The one on the Qs have already been filled. So then you have this blue rising trend line here. This goes all the way up to 355 currently. Could see a pullback to this 352, 355 area, depending on how long it takes to get there. That would be another good area to try to play the bounce off of. If that can't hold, then you're really looking at a pullback to this major support level that goes all the way back to February of this year. Or actually, it goes back further than that. It goes back to September of this year. September of this year has held pretty well. That would be a pullback to the 319, 320. That would mean that you're seeing some wholesale selling, even more so than what we've seen before in a lot of your FANG stocks, maybe even 10% to the downside, which would be significant. That's going to put a big hit on the market if you see a lot of the big tech plays start to sell off. So this is probably in the 6 month range, probably a worst case scenario. And looking at IWM, we got this rising trend line here. It hasn't broken it yet. You're essentially just sitting like right on that rising trend line. And you got this data point here where it's bounced and this data point here, and then it's just sitting on it, slightly below it, I guess you could say, but not a definitive break by any means. And then you got this support level here. So IWM, there's not a lot to go over here, but where I could honestly see IWM going down to is back into the 180s. That wouldn't be a very good thing for it either. And then you got the VIX. 7 out of the last 8 days, you had a lot of aggressive selling. Every time that the VIX popped higher, it immediately got sold off. Now, sometimes you'll get these one-day events like what we saw today and back on August 4th. What we're looking at for tomorrow is, does this same thing happen where you just get completely demolished all the gains from today like we have seen so many times in the past? That's been the trend of late. And the technical analysis on it has it approaching some serious resistance where these sell-offs keep happening. So you could see the potential for a move up to like 1690, 17 tomorrow, and then you get it completely trounced. You also have rising support underneath, but it's nowhere close to touching that at this point in time. Don't forget to like and subscribe to my channel if you'd like more swing trading tips and analysis of your favorite stocks. Thank you guys, and God bless.